So when it comes to memory stocks, Micron, SK Hynix, SanDisk, all of them, there is a major disconnect between the price of the stock and the business opportunity that is at hand for these stocks. And this obviously goes over into the semiconductor space, AMD, NVIDIA, Intel, and pretty much pervasive across the entire AI stack. There is a disconnect. And that disconnect is what is hurting the price and the opportunity right now in the memory stock sector. And we're going to talk about that, and we're going to jump into this. And I'm going to explain to you the outlook for Micron and SK Hynix for the remainder of August in this video, as well as we're going to cover everything else you need to know so that you understand the real opportunity here. Okay, so if you haven't already done so, please hit that subscribe, hit that like. I'm trying to grow this channel and grow this community. So look, this is what grabbed my attention. Tech stock investors have a $1 trillion problem that will not improve until at least 2028. And this title goes to the heart of what it is that I'm talking about. And these are narratives and themes that I've been talking about. You remember in the last couple of weeks, really last 3 weeks, 4 weeks, there was this narrative that would not go away. And it was where everybody was worried about capital expenditures from the hyperscalers, what they were spending on their AI compute platform build out. And it was pummeling and it was hitting all these stocks, especially Micron, SK Hynix, NVIDIA, AMD. And we have to kind of look at that, because that is, to me, the heart of the disconnect, is that investors in pretty much any given company, but especially investors who are investing in Google, Meta, Amazon, Microsoft, they don't like the fact that these companies are spending a tremendous amount of money. And here's the hyperscalers' capex expenditures. And you can see that they are going up dramatically, and they are going to, go up, and you can just see that. And the fact of the matter is that the stock investors, the people that own stock in these companies, don't like this. But yet it's a double-edged sword, because if these companies were not building out their AI compute platforms, then the stockholders would be looking at them like, why aren't you building out your platform? They just don't want them to spend any money for it, bottom line. And it's the companies like Micron and SK Hynix that we know that essentially are selling, I call them the picks and shovels here, right? The absolute essential components, memory, semiconductors, from, all the other things that are necessary. And they're the ones getting where all the money is going to, and beyond this, capital expenditures look like they're going to exceed cash flow from operations for the next couple of years. That's huge, because like we saw with Google in their latest earnings report, this is the first time that Google in a quarter ever spent more than they had coming in with free cash flow. And it was about $6 billion in that quarter alone. And Google's stock got pummeled for it. And because they raised their capital expenditure forecast, things of this nature. But this is the disconnect, okay? Is that stock investors in these companies don't want this. And then it bled over into the price of Micron and SK Hynix and all these others, because then it was like, well, these companies are overvalued. These companies are this. When is the capital expenditure money is going to slow down, and so forth and so on. And all of that rhetoric and that narrative and all those themes were just swirling in July. And a lot of that added up to impact all of our stocks. For example, you can see Micron in the last month was down 18%, basically in the month of July. SK Hynix was down about 17%. SanDisk in the month of July was down 28%. Now there's still dramatically, positive returns on like in the last 3 months, 6 months, you can see SK Hynix is up 112%. 6 months, this is not going to show here because obviously SK Hynix just started trading in the United States, but the 6 months here, Micron is up 112%. But the bottom line here is that tech stock investors on both sides were getting hit by all this. Now, this goes to the heart of the disconnect. This goes to the heart of what we're talking about. In this graphic I built here for you, I wanted to really kind of show this to you. So at the very top, the big disconnect. Stock prices say AI hype is fading. Memory stocks have gone too far. Capital expenditures are going to slow down. The big scalers are not going to spend this or this or this. And essentially there was a sell first, ask questions later fallout that we saw in the month of July. But look, the business fundamentals say Memory shortage remains. In fact, it's getting worse, if you will. We all know that. AI data center spending continues. Bottom line, not slowing down. Capital expenditures not slowing down. Customers are paying those higher prices because they have to have the memory chips to go into their products. GM, Ford, Apple, you name it. AI data centers have to have this. NVIDIA, Intel, so forth. Margins remain exceedingly strong. SK HYNIX missed on their last earnings call. They did. Okay. Micron did not. Demand still does outpace supply, though, bottom line. And so the fundamentals remain extremely bullish. And if we look in August, what we have to get past is this massive disconnect. Tech stock investors have to be okay. The fact that there's a $1 trillion problem that's not going to improve until at least 2028. And that $1 trillion problem is the fact that 2027 capital expenditures estimates have jumped from $929 billion to over $1 trillion. They have. It's not going away. And so investors have to get okay with this. Wall Street has to get okay with this. And the messaging around this has to get okay with this. There has to be a fundamental shift and a fundamental change in this, in the fact that AI spending is here to stay, memory shortage is here to stay, and that memory still, the business fundamentals are the same. AI memory demand is exploding. The memory shortage has not disappeared. AI infrastructure spending keeps climbing. All of that is the same as it was a month ago. It is not changed. But yet we saw Micron drop 18%. We saw SK HYNIX drop 20% in the last month because of this disconnect. If we look out in August, what we need to see happen is we need to see them recover. We need to see them, go back up. And I think we are going to see Wall Street get shocked. We need to shock Wall Street into the fact that this is not going to change. We need to continue to see strong earnings from companies like AMD, which I think they're on tap to report this coming week. And if we look specifically, and other companies, right, we need to continue to see AI spending, which we are. By the way, every single hyperscaler is reported. Every single one of them addressed capex expenditures and essentially said, we are not slowing down. We are not going to not spend on this, and we are going to continue to spend this money. Bottom line, okay? Micron specifically, outlook looks very, very bullish. We know all these things, guys, okay? So if we look at, and we kind of zoom in on this, let me move it in this lower left-hand corner where you see Micron, okay, is that all of these things are still in play. HBM production is largely committed. Yes, it is. Strong pricing power. Absolutely. Prices have gone up. Expanding margins. Because the prices are going up, margins are continuing to go up as well. Gross margin, profit margin. There is significant Wall Street optimism around Micron. Nothing has fundamentally changed. It is the emotional disconnect and the panic around, again, AI, capex expenditures, all that, which is not going to go away. That's what's interesting to me. It's like it hadn't changed, which is why, guys, I haven't sold my Micron. I've been buying Micron, been buying SK HYNIX. SK HYNIX has an August outlook of very, very bullish. Leader in HBM. Again, record revenue, profitability. Did miss a little bit. Did have a little bit of a negative earnings call. We know this. Again, I'm not worried about them from a long-term standpoint. SanDisk is a little bit more volatile. It's moved a little bit more. We've seen that. And got a little bit of negative kind of scenario playing out around SanDisk right now in the last 4 or 5 days. We'll see how that kind of continues to develop. Samsung, monolithic company. Memory is a fairly, I wouldn't say it's small, but it is not as small, but it is, they do a lot more than just memory is what I'm trying to say. And I think they continue to do what they're doing. And again, it's very bullish. Look, this is what's interesting, okay, is that all of the major memory players, nothing has changed, okay? And the August outlook's really, really good. But also you have to factor in when you're talking about kind of what we're seeing play out in the market is all these external factors, emotional pressure, panic selling, um, narratives and themes from the financial sector that will not go away, the continued trotting out, if you will, of the old, memory is cyclical, capex expenditures are just, well, my God, they're going to get to be too high. Guys, everybody knows these numbers. They do. So why is it that we continue to see these stocks get punished in July? They got punished because I think, again, of that major disconnect that we see. And what I'm hopeful here is that AI investors from the gamut, the investors that own the hyperscalers, the investors all the way to the investors that own, the different companies in the AI stack, memory, semiconductor, cabling, energy production, what have you, is that we all kind of have to understand the game. And I think what we got last week from the earnings reports from all of the hyperscalers, to me, does give us, hopefully, positive and stable, firm footing. So maybe we can put this capex expenditure debate and rhetoric and all that kind of stuff and the fear and uncertainty around that behind us. Because here's what it comes down to, and I want to go back to this title, is that tech stock investors have a $1 trillion problem. I don't think it's a problem, but they have to digest this and be okay with the fact that hyperscalers are going to continue to spend even more money going into 2028. Period. And be okay with it. Because I'll take you back to something I said at the top of the video. If these companies weren't spending on this, their stockholders would be looking at them going, why are you not spending on AI compute build out? You are not going to be proactive. You're not reacting to the market, and so forth and so on, right? The market, stockholders, Wall Street would be crushing them if they were not developing and deploying AI products to sell to their respective customers, Google, Microsoft, Meta, Amazon, Oracle, right? Bottom line. And that's what it comes down to. So that's what's interesting to me about this whole equation. It's like, you want them to have these products, but you just don't want them to spend any money. And that's just not reasonable. And that's where we have to get past this. And again, I think being memory stockholders, which again, I own AMD, NVIDIA, Intel, and all those as well, but this is a memory specific video. I think we are positioned long-term. We are fine. Do we have volatility in the short term? Yes, we do. 100%. Because the narratives and the themes and the rhetoric and the fear and the uncertainty have not gone away yet. And by the way, there's a new one now. It's the circular financing thing where, when NVIDIA came out and announced a $250 billion investment in OpenAI, one of their data centers. Okay. And that was it's circular financing. Okay. It's all, there's always going to be something for them to pick at and to look at. And I'm not minimizing that that's a large sum of money, but it's the circular financing thing. All right. So that's what I got for you. Look, hey, if you want help making even more money trading stocks, this is the way to do it. If you want to know when to buy and sell every one of your favorite stocks to make even more money, this is an example. This is a trading indicator that I have built, spent $30,000, hired a dev team to do it for me, and I use this software every single day. So you see this is down here in the lower left. That's a buy alert all the way to a sell alerts. And there was other buy and sell alerts. See this blue box? 86 days, Micron went up 254%. Okay. How would you like to know the perfect time to buy and sell along the way? There it is. Proof that it works right there. Okay. That's what it does. And the software literally costs about $1.10 a day to use. There's a link in the description below to get it, to try it. There's live coaching every week. There's a private chat community. Everything is there for you. And by the way, there's a 30-day, no questions asked, money back refund guarantee. Try the software. If you don't like it, you get an instant refund. So it costs you nothing. All right. Here's AMD, similar deal. Buy here. There was some other sell and buy alerts along the way. And you can see in 106 days, 161%. To put this in perspective, 254%, $1,000 invested here, 86 days later, you would have got, if you would have sold it all, got your 1,000 back, you would have made an additional $2,544 in 86 days, less than 3 months. Okay. So what is that? It's about $800 a month. What could you have done better or more in your life with an additional $800 a month off of one investment using software that literally costs you about $1 a day to use? That's not bad, right? That's a pretty good value ROI. So if you're interested, links are right down there. I'll also drop a pinned link in the comments so you can check it out as well. Take it for a test spin. You got zero risk here. Try it out. All right. I'll see you. Thanks.